SoftBank is reportedly sitting on $4 billion worth of trading gains, but those gains are tied to US stocks, which were clobbered in last week's trading. The report has sent shares of the Japanese conglomerate tumbling this morning. Here with the details of that story and some of the wider moves in tech, Dani Burger. Good morning, Dani.
Good morning, Anna. And that's right. What's being called the NASDAQ whale has been unmasked. That is that SoftBank spent billions of dollars betting on U.S. equity derivatives, more specifically call options tied to U.S. stocks, so bullish derivatives that it would go higher from here. So you can see what that report has done to SoftBank this morning, declining more than 7% in the Japanese trading session, its biggest decline in about 4 months. And the reason that decline is happening because although a strategy tied to tech shares may have gotten them $4 billion in trading gains, those have yet to be realized. So they need to unwind their position quickly, or else they risk seeing those gains being eaten away as we see NASDAQ futures continue to tumble this morning and really get hit hard last week. But let's be clear, this strategy is a risky one. That's what strategists are telling us looking at it. And you can see just how risky it is and just how much they may have impacted the market by looking at my next chart, which is showing us call options tied to U.S. stock. Volume has exploded since March. We've been talking about this very frequently. We've said, is this a lot of retail traders? But this amount of volume, according to Goldman Sachs, can't just be retail. Over the past couple weeks here, $335 billion worth of options traded hands on average. That's 3 times the average from 2017 to 2019. And it really has taken off in the past month. Bloomberg reported around here that SoftBank had a strategy tied to public markets. Well, now that we know the detail of that strategy, that is its equity derivatives, it may have created what's called a feedback loop. That's according to Nomura, who says they take these options out. Banks need to hedge that position, snapping more of the underlying stock. So yes, it may have been profitable for some time, but now traders are concerned that those profits are about to be lost and are starting to sell off SoftBank shares.